Passive income is often touted as the holy grail of personal finance. However, true passive income is only achievable through a limited number of avenues, such as cash flow from rental properties or interest on cash. One of the most popular forms of passive income is dividend income from investments in the stock market. With several years of experience in investing in dividend stocks, we are going to document the top 7 positions that are best for your long-term portfolio. One of the most attractive aspects of dividend income is that it continues to roll in even during market downturns. For instance, companies like Coca-Cola have consistently maintained and increased their dividend distributions for over 61 years, even during the worst recessions in modern history. This is just one of the many advantages of dividend investing. In this video, we will discuss 7 dividend stocks that we hold in our own portfolio and have continued to add to over the years. Don't forget to subscribe to our channel and hit the notification bell to watch our latest videos as soon as they are released. However, it is important to note that just because we hold these positions, it does not necessarily mean that they are the right fit for every investor's goals. Number 1. Coca-Cola Corporation, ticker KO. Coca-Cola is a global giant with over 120 years of operating history and operations in 200 nations worldwide. Despite the shift in consumer preferences away from sugary soft drinks in the US, Coca-Cola has strong growth potential overseas and steady demand in Western markets. What makes Coca-Cola stand out as a stock with staying power is its enviable track record of 61 straight years of dividend growth. This long-term income potential has attracted investors such as Warren Buffett's Berkshire Hathaway, which is the largest shareholder with over 9% of the company ownership. This institutional buying pressure supports the shares and strengthens the likelihood of consistent dividends going forward. Beyond just Coca-Cola, the company has a diverse product portfolio that includes vitamin water, Fuse teas, powered sports drinks, and Minute Maid juice, among other brands. This provides additional growth potential and diversification within the consumer staples sector. Comment stocks if you would like us to make more videos like this in the future. With a yield of 3%, Coca-Cola is a stock worth considering for investors seeking steady and reliable income. Number 2. Consolidated Edison Inc., ticker ED. Consolidated Edison may not be the largest name in the utility sector, but its track record of consistency and stability makes it a top pick for long-term dividend investors. Its position in the highly attractive regional market of metropolitan New York City, coupled with the guaranteed baseline demand for electricity, makes Con Ed a safe investment choice. The fact that most U.S. electricity companies are regional monopolies with limited competition only adds to the attractiveness of the stock. With 3.5 million customers in the New York City area and natural gas connections serving 1.1 million more, Con Ed has a strong market presence. Having provided 50 consecutive years of dividend increases to shareholders, it's clear that Con Ed is a reliable source of income for those looking for a dividend stock that's built to last. The yield for this company is currently at 3.5%. Number 3. Johnson & Johnson, ticker J&J. Johnson & Johnson is widely considered one of the most dependable blue-chip stocks in the market, with a rich history spanning over 139 years. Don't forget to like this video if you've watched it till now, as it inspires us to make content like this. With a market cap of over $400 billion, J&J is among the top 10 largest stocks listed on Wall Street, and its brand recognition is unparalleled in the healthcare industry. It also boasts of being one of only 2 U.S. companies that have been awarded a top AAA credit rating, adding to its already impressive credentials. In terms of dividend growth, J&J has an impressive track record of 60 consecutive years of dividend increases, making it one of the longest-standing records on Wall Street. Despite its consistent dividend growth, the company still maintains a payout ratio of less than 50%, indicating the potential for further increases in the future. J&J's primary business operations lie in the healthcare sector, with a dominant position in consumer health products such as Tylenol and Band-Aid, high-margin pharmaceuticals, and medical devices. The company's diversified business model and stable foundation have contributed to its staying power, making it a popular choice for income investors. It currently has a dividend yield of 2.8%. Number 4. J.P. Morgan Chase & Company, ticker JPM. J.P. Morgan Chase & Company is a dominant player in the financial sector and has established itself as one of the top choices for investors looking for a reliable dividend stock. With massive operations and consistent profits, J. Morgan has been a leader in the industry for over 220 years. The bank has shown an impressive track record of maintaining and increasing its dividend payouts, even during challenging times. For instance, J.P. Morgan was the first major financial organization in the U.S. to surpass its pre-crisis dividend levels with an annual payout of $1.56 per share by the end of 2014. In comparison, other major banks like Citigroup have struggled to maintain their dividend payouts. J.P. Morgan's stability and long-standing reputation as the largest U.S. bank by assets makes it an attractive choice for long-term investors seeking reliable returns. It currently has a dividend yield of around 2.9%. Number 5. Microsoft Corp, ticker MSFT. When it comes to the technology sector, it's difficult to predict what the future holds for any company. However, Microsoft seems to be a standout choice for a forever stock. With its $1 trillion market capitalization and AAA credit rating, Microsoft's massive scale and strong financial foundation make it a solid investment option for the long haul. Despite its current yield being the smallest on this list, the company has a proven track record of dividend growth, having more than doubled its payout since instituting its first regular dividend in 2013. With $100 billion in cash on hand, Microsoft has the resources to continue investing in innovative technologies and growing its dividend payouts for years to come. Number 6. Prologis Inc., ticker PLD. Prologis may not be a name that immediately comes to mind, but it's the largest publicly traded real estate company in the U.S., providing unrivaled stability in the sector. Unlike companies that are tied to volatile real estate trends, Prologis operates in the leasing of warehouses, industrial properties, and logistics hubs, boasting a leasing capacity of 1.2 billion square feet to approximately 6,600 customers globally. With such a massive footprint, Prologis is likely to remain a reliable player in the real estate market for years to come, making it an ideal stock for long-term investors. It has a current dividend yield of 2.4%. Finally, number 7. Verizon Communications Inc., ticker VZ. Verizon, the leading wireless provider in the United States, is a top-tier investment option for those looking to buy and hold for the long haul. With a customer base of almost 150 million people, its position in the telecommunications sector is secure, providing a steady cash flow that is not likely to falter anytime soon. Moreover, despite its already impressive 6.5% yield, Verizon's dividend payout ratio of just 55% of earnings per share means that there is ample room for future increases. In fiscal 2023, Verizon is projected to earn $4.71 per share, while currently paying $2.61 in dividends per share. With such promising financials, this stock is a compelling choice for long-term investors seeking stability and consistent returns. It has a dividend yield of 6.5% currently,